Hi there, welcome to Nappy Invests. Just come off a night shift, so I did a 12-hour night shift overnight. And usually when I do a night shift, I go for a run afterwards. It clears the mind. It's something I am now used to. And this morning was a first because never before has blood been drawn when a magpie has swooped me until this very morning. There's a scar right there. There it is there. So a bit of a surprise, first time it's happened. And then just 30 minutes later, as I ran down another street, I was stalked by another magpie for about 200 meters. It really wanted to swoop me, and every time I looked around, it stopped, and every time I turned back around away from it, it started to swoop. So I had to sort of walk backwards, keeping that magpie in full view. Anyway, so a very eventful morning for me and a very eventful day for Phoenix on September the 20th. Share price did drop 22% in the one day. Overall, the market fell about 2%, so not good news for most shareholders on the ASX. Those who are in cash right now are probably loving what's happening with the market. But the question is, and I did get this question, why did the share price of Phoenix drop 22% in one day? But there is a logical reason behind the drop in share price, and it's not bad news. And it's all about the share or the company Phoenix going ex-dividend. So I'm going to discuss what ex-dividend is to explain why the share price in this company dropped 22% in one day. I think, if I remember correctly, I might have already done a video on this topic, but it's always a good reminder that this time of year, when companies are paying dividends, that you can see the company's share price drop when it goes ex-dividend. So before we talk about ex-dividend, just a few facts in regards to the financial year Phoenix just experienced. For full disclosure, I was a shareholder of Phoenix. Then I sold out when we did see the iron ore prices come under pressure because of what's happening in China. We have seen iron ore fall off a cliff, and I'll just show you the weekly iron ore chart towards the end of this video. But when Phoenix released some profit guidance or something or other a few weeks ago, I decided to buy back in, even though iron ore prices were under pressure, because I think the market was punishing this company a little bit too much. And there is value in this company right now. And when they announced they were going to give a dividend, a fairly good dividend based off the share price, that was also attractive. So there are some really attractive things about this company right now. And if I did have to pick an iron ore producer to take a position, it would actually be Phoenix. It wouldn't be Fortescue, wouldn't be Rio, wouldn't be BHP. It would actually be Phoenix, because I do think this company is being punished a little bit too much. They've also hedged the price they're going to be selling iron ore over the next year as well. So their results in a year's time won't be all that bad if iron ore prices keep coming down a lot. Anyway, the market cap of Phoenix at 22 cents is only 110 million. And when you compare the market cap of this company to the fact they have revenue of 114.4 million, net profit after tax 49 million, net cash of 69 million, operating cash flow of 65.3 million, and a dividend of 5.25 cents, automatically should show you that there is some value here. But we can even go an extra step. All these numbers, the revenue, profit after tax, operating cash flow, and dividend, are all one half of performance. This company started their operations and selling iron ore in February of this year. So this is not full year numbers, even though it is the financial year 21 numbers. This is just half year numbers. So even if the iron ore prices do say it's suppressed, and even if they lower, the performance of this company, when you look at financial year 22, will still be quite good. So we might still see these sort of numbers in the full year results. So that's one of the reasons I decided to take a position in this company again, to take advantage of the value right here that we are seeing. The fact that Phoenix has net cash of about $69 million means the enterprise value of this company is $45 million right now. And it also, when you calculate the PE ratio based off their financial year 21 numbers, you get 2.2. And that is only one half of operations, not one full year. And the EV to operating cash flow is 0.7, and the dividend yield at the moment is 24%. So the market right now is absolutely punishing Phoenix simply because of what's happening with the iron ore prices, and it's completely ignoring all these other facts about the company, which does present a pretty intriguing value play when it comes to Phoenix Resources. Now, in saying all that, it's completely understandable why the market is doing that, because it is being spooked by what's happening with iron ore prices now. Iron ore has fallen off a cliff over the past about a month or so. It's gone from well over $200 to currently about $110. And what's happening in China with those real estate companies, what's it called, Evergrande or whatever it's called, there is fear that that could affect property and development in China, which means there's going to be a lower demand of iron ore moving forward. That's definitely a possibility, and that's why the market is spooked at this point in time. But even though the market is spooked, that can lead to opportunities like we are seeing with Phoenix. And that's why I have taken a position, because I do think the market has overreacted when it comes to this company. This is the question that was raised in one of my other videos in regards to Phoenix by one of my loyal subscribers. I'm assuming it was a subscriber. If it wasn't a subscriber and you're not a subscriber, I do recommend subscribing. I think this is the first time I've actually done that. Why not subscribe? Anyway, the question was, hi, could you please assist from your experience why Phoenix down 22%, a company in profit or green signs, reason to announce dividends, why? So obviously, just because this one person has raised this question, there's going to be other people who might be wondering why Phoenix Resources share price dropped 22% in this one day. And again, there is a logical explanation for it, and it's not a bad news, particularly if you are a shareholder of this company. So let's have a look why Phoenix Resources share price dropped 22% in one day. To understand why Phoenix share price dropped 22% on the 20th of September, all you have to do is understand an announcement this company released on the 15th of September, which was called the dividend distribution for Phoenix at 8:24 a.m. So have a look at that announcement if you have the chance. And in this announcement, there's a fair bit of information, and we can glean a lot of information from this. And there are some important points to understand in this. And the most important points are the distribution amount, which is the dividend, and that is at 5.25 cents. The ex-date, which I'll talk about in the next slide, that's the 20th of September. The record date you don't have to know, because that's the day after the ex-dividend date. And then, of course, the payment date, and that's exactly what it says. That's the day that Phoenix will pay the shareholders that are entitled to the dividend. That's on the 5th of October. But what is the ex-dividend date? That's very important, because you just notice that's on the 20th of September, and that coincides on the day that the Phoenix share price dropped 22%. I found this definition of the ex-dividend date on a website called investor.gov, the US Securities and Exchange Commission. It's probably my favorite definition of this that I did find, because it's actually quite simple. A lot of the other definitions were a little bit more complex than this, but I do find this definition is easy to understand. So if it's not, let me know, and maybe I can try to even simplify it even further. But it states, if you purchase a stock on its ex-dividend date or after, you will not receive the next dividend payment. Instead, the seller gets the dividend. So the ex-dividend date is all about who is entitled to the dividend that a company has been or has announced. And the ex-dividend date is just separating those who are entitled to it and those who are not. So if you buy on the ex-dividend date, you are not entitled, or after, you are not entitled to the dividend. But if you sell on the ex-dividend date, you are entitled to the dividend. And that actually does have an effect on the share price. Theoretically, the share price should decrease by the amount of the dividend on the ex-dividend date. It's not always the case. Sometimes they decrease by a little bit more. Sometimes they decrease by a little bit less. And I'm not sure if you should take into account franking credits as well. And the reason the share price should decrease by the dividend amount is because if you add up all the dividends that the company is paying, say it's like $30 million, the value of the company is lower by $30 million. That's all the reason why the share price should decrease by the dividend or the amount of the dividend, because the value of the company itself has actually decreased. And when we look at the Phoenix trading on the 20th of September, the share price actually fell by 6.5 cents. So that is a little bit more than the actual dividend, which was 5.25 cents. But remember, on this day, the overall market dropped by 2%. That's why Phoenix share price dropped by a little bit more than the dividend. And because the dividend yield is so high for Phoenix, that means the share price dropped by 22% and might have spooked out some investors who didn't realize why the share price dropped by that much. They just see the share price dropping by 22%, but may not realize that they are now entitled to this fairly high dividend that Phoenix is paying for the financial year 21. Last thing I want to show you is the weekly iron ore price or charts since 2014. And the low point in this time period was towards the end of 2015 when iron ore prices got all the way down to $35. And I still remember that period of time because there were a lot of pressure on iron ore companies, including Fortescue, BHP. Our share price went down a fair bit. Atlas Iron went from over $1 to something like less than 5 cents because that company's all-in sustaining costs would have been fairly high. Companies like Fortescue, cost for getting iron ore out of the ground is actually a little bit lower than a lot of other companies as well. BHP and Rio have the same benefits as Fortescue, that getting the iron ore out of the ground costs them a little bit less. But those companies that have higher costs to get the iron ore prices out would have been struggling around that time. And that's why we eventually will see the iron ore prices rise, because there's going to be less supply into the market because the iron ore prices are down low. And that's all the reason why we do see cycles in commodity prices. We see commodity prices go up and down through time. And since that low in 2015 from 35, we have seen the iron ore prices increase from $35 to a top of $220 only a few months ago. And since that peak of $220, we have seen iron ore prices fall off a cliff. In fact, they've almost fallen by 50% in about 2 months. And right now, as I am speaking, the iron ore prices are about $115. And who knows how more they have to fall simply because of what's happening in China right now. That's all I have for this video on Phoenix and this company going ex-dividend and why the share price of this company dropped 22% on September 20. Wasn't because something bad happened to the company, wasn't because they had a profit downgrade or anything else. It was just because they went ex-dividend and they were going to pay a fairly large dividend to their shareholders. If you do have any questions about what I've talked about in this video, please leave a comment, a question, or your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.